series of 2015 with me, Richard Perry, market analyst at Tech Markets. Happy New Year to everyone. Whether it turns out to be a Happy New Year on the markets is another question entirely. The issues that we've been facing over the past few months have sort of continued, really. There's been no real let-up over the Christmas period. You've still got issues over whether the Eurozone is going to embark upon quantitative easing. The market is still speculating on whether the US will be moving towards a tightening cycle, and now also we've got the problems in Greece. The Greek political situation had moved towards a new stage into December, where they were unable to agree on a president, and that subsequently means now that we're going to be faced with parliamentary elections, and the prospect of the Syriza anti-austerity party making strong gains in the polls could well mean that there's a bit of upheaval in terms of how Greece is moving in on its austerity drive and its move within the programme that it needs to put into practice from the IMF and the debt repayment programme that it's on. So, what does this mean for markets? Well, the euro is under pressure again. It had been under pressure significantly on Friday, and it's again under pressure today. It's back below 120 for the first time since 2010 now. That's a significant move that we've seen in the last couple of days. And also what we've got is the big move that has come with the dollar index, which has broken out strongly. That was the move out on Friday. The strong move with the big sell-off on the not only the euro but also sterling as well. And we're now up towards levels. Well, it's broken out significantly above 2010 highs, and it's now back towards levels not seen. That 92.63 is, I believe, November 2007 high. So the dollar continues to strengthen, really, and it's continuing to go today with this euro weakness down 30-40 pips at the moment. In terms of equity markets, big correction actually on Friday, and what we've seen on Friday is this VIX spike higher, which is volatility, and that sort of coincided with some volatility on the equity markets, certainly on towards the end of 2014 and also on Friday as well. The equity markets have remained sort of volatile into the European trading session today as well. It's fluctuating between positive and negative. Currently FTSE down 30 points. DAX is slightly higher, but what we're seeing is an element of uncertainty, I think, today in these markets. And the only real economic data that we've got out today, or certainly just had the UK construction PMI slightly lower than expected, 57.6, which is below the 59 that had been achieved last month. Sorry, 59 that had been expected by the market. But the sterling is not really reacting too negatively to that. Construction PMI, or certainly the construction industry, only accounts for around about 8% of the UK economy, so it's not going to impact too significantly there. But certainly throughout the morning, what we're focusing on is this German inflation data. You've got the regions announce their inflation at periodic times through the morning, and then you've got the final bit of data for the country for Germany at 1 o'clock UK time. That's expected to fall to 0.2% on the year. So continued decline in inflation, and looking at the bond yields, they continue to fall away as well. Markets continue to price in the prospect of a quantitative easing move by the ECB, and it's 22nd of 22nd of January meeting. So yeah, the markets are under a little bit of pressure, certainly in terms of forex today, and that sort of takes me on to my chart of the day, which is the Kiwi dollar. Now, this Kiwi dollar is one of these forex pairs that is under pressure with the dollar, although what we are seeing is we're still in this, you could argue that we're still within this trading band, you see this downtrend that I've drawn in here. You've got this series of lower highs, and that continues to see the Kiwi fall away. Now, what we've seen also is I've drawn in this 76.90 level, because that is a level at which it's only closed below twice in that 3-month period. And today we had a sharp move to the downside, almost back towards that 76 figure level. 76.16 was the low overnight, but we've had a rebound, and that rebound means that now there could be, certainly if I look on the intraday chart, you'll see that rebound if it comes out. You've got the rebound on the last couple of hours where the Kiwi has started to strengthen, or to recover, certainly, probably a better word, recover against the dollar. And that means that we're left with the prospect, if it closes back above 76.90 tonight, that would leave us with a bullish candlestick. Actually, that would actually give us probably what would be described as a hammer candlestick, which could mean that we'd be bounced back into a bit of a recovery phase within this chart. But you've still got this big downtrend in play. That downtrend comes in around 78.50 at the moment, so there's still quite a lot of rebound that we could see, even though that you'd retain this bearish outlook on the Kiwi. But I would still be more willing to play Kiwi as a sell into strength, and I'd use any sort of rebound as a chance to sell. If you got on the intraday chart here, you'd still say that that is an old downtrend, which I would have to probably get rid of, actually. That is the chart on the intraday basis, and you'd say that around 77 figure, that's where you start to see this this resistance coming in, old lows, and that would be where you'd start to think about the potential for a selling opportunity, I would say. But as I said, there could be a bit of a near-term rebound, and I think anything between 77 and 77.50 is where we could see a rebound into. So I'd say that's a 50-point bit of band of resistance that you'd start to think about a selling opportunity. I think on this chart. But as I said, on the daily chart, you've actually got up towards 78.50 for your selling opportunity. But I don't think that, looking at this intraday chart as well, I think that the outlook remains pretty negative. Momentum indicators are all fairly negative. It would just be unwinding an oversold position, and I think that would be where you'd start to see the sellers return between 77.50 and 77, big figure. Anyway, I wish you good luck in your trading on the Kiwi today.